Hey guys, so today I want to talk about how to take advantage of renovation loans to both buy and refinance real estate. So the chances are you've probably seen some of those cool HGTV shows that we all watch endlessly, where they're walking around and they're pointing out all the things that they want to fix. And if you're like me, you're probably sitting there and saying, how the heck in the world are these guys affording this? They're buying a really expensive house and now they're going to go through it and repair and change everything that they want to do. And now, so the beauty of this is most of the time, at least, they're not using their own money to do this. So they're going to their bank or their lender and they're getting what's called a renovation loan. And the bank or the lender is actually funding that project. With all that being said, I want to talk through the renovation loan, what it is, how to use it, and ultimately help you be able to renovate a home and add value to that home. But before we get into that, I have one huge favor to ask. If you could please like, share, and subscribe to this channel, I would really appreciate it. We spend a lot of time on these videos trying to put as much value as we can, hoping that everyone watching this will benefit from it. And if you can do that, it will help us get this video out to more people. Also, if you can follow me on Instagram here, we also put a lot of content there similar to this, but a lot of mortgage tips and updates about our own real estate rental portfolio. So make sure to follow me there as well. All right, so first let's talk about what a renovation loan is. So the idea is the bank or lender will both fund the purchase of the home, so the amount of money that it takes to purchase the home, as well as combining that with the money that it will take to make the renovations that you want. So the beauty of this is it's one mortgage combining both the purchase and the renovation, and then as you renovate the house, your lender will actually pay your contractor directly. So it's really nice because you don't even need to get in the middle of the money portion with your contractor. The bank and the lender, they'll handle that part directly. And so a super easy example of this is imagine you're purchasing a home and you're going to buy that house for $500,000. And as you're touring the property and looking at it, you decide there's a handful of projects that you really need to do or want to do. So maybe you need to update the kitchen, add a new bathroom, and maybe finish the basement space for your family. Now, that may total an extra $100,000. So you're buying that house for $500,000, and then as you're touring it, you determine there's about $100,000 worth of work. Now, in a normal world, normal mortgage loan product, you would need to spend that $100,000 out of pocket to renovate the house. The beauty is with the renovation loan, you're actually going to get a mortgage for $600,000. So it's going to be the $500,000 to initially purchase the home, and then the lender is going to add that $100,000 in renovation costs to that mortgage, so your one mortgage combined would be for the $600,000. Now, besides the benefits of not needing to pay that $100,000 out of pocket, because obviously that's a huge benefit, the other benefits, I think back to a client that I just recently helped, and they were on the house hunt for what felt like years. It was probably only 3 or 4 months, but it felt like a long time, where they were going out house hunting, looking at turnkey homes, and offer after offer after offer was not getting accepted. And so we went back to the drawing board and tried to figure out a strategy that would work for them. And what we realized was a lot of the homes that were sitting on the market were what you would consider fixer-upper properties. And so we shifted them into the mindset and into the loan program of using a renovation loan, and within what was probably another month, they were able to get an offer accepted on a fixer-upper property. Now, this was really beneficial for them because there's not, at least we find, there's not as much competition on these fixer-upper properties for a few reasons. One is a lot of people feel like they wouldn't have the money to renovate the home. So when they're out house hunting, they're only looking at these turnkey properties because they know they don't have the savings to dump into this property to renovate it properly. The the other reason is sometimes that the property may not be eligible or may not qualify for a conventional mortgage. So then right off the bat, that eliminates a lot of people there as well. And then I would say the last real reason that these properties have less competition is the fact that a lot of people don't want to be heavily involved with contractors, especially with the money piece. So them having to pay the contractor directly and deal with that whole part of it. And so what's nice on the renovation loan is that the lender handles that part, so it makes it much easier for any individual that's taking advantage of a renovation loan. Now you're probably sitting there thinking, this all sounds too good to be true, right? So the downsides of it, we'll talk about what maybe some of the negatives to this can be. And while I don't think there's a ton of negative or a ton of downside to it, I think a few things just to be aware of would be, one is that if you do decide to use the renovation loan, you lose the control of either doing the work yourself or hiring a contractor that maybe is cheaper because they don't have the proper licensing or they don't have the proper insurances and things like that. So what I guess a perceived negative could be that you wouldn't be able to do the work yourself. So that, if you're someone who's handy and wants to do that work, you wouldn't be able to do that. And if you wanted to try to hire someone that was maybe not as licensed or didn't have the proper insurances and you could save money there, you would not be able to do that with the renovation loan. The only other downside that I would add to that is obviously you're financing more money, right? So the obvious part is instead of that $500,000 mortgage that we talked about, your mortgage would actually be that $600,000. So it's really important just to be aware of the fact that when you're planning and budgeting, knowing that, just because you're buying for $500,000, your mortgage is actually going to be much higher and it's going to be a little bit more expensive monthly because you're wrapping in those renovation costs. And so I want to give a real life example. So not too long ago, I purchased a property that needed a ton of renovation work, and it was a 2-family property, and the construction budget ended up being around $180,000. And I, unfortunately, did not use a renovation loan. So I just purchased the property and then on my own had to fund that renovation project. Now, the good news is we got all the value that we had hoped. So we spent $180,000 on the renovations, and it took the appraised value of that property from $840,000 up to $1.7 million. So we still reaped the benefits of that value creation, but I had to tie up $180,000 during the renovation process that I could have used elsewhere. I could have had a lot better sleep at night, and it would have made it for a much less stressful process. Now, if I hadn't done that and I took the advice of this video, I would have used a renovation loan and I would have financed that $180,000. And now that would have really helped me been able to use that money on other things. And the first thing that comes to mind is I would have been able to acquire another property. So using the renovation loan would have allowed me to do so much more, and it would have allowed me to continue to grow my portfolio at a much quicker pace. All right, and so enough about me and my portfolio. I want to stress that this is really helpful not only for investors, but also for home buyers and first-time home buyers. And I think about first-time home buyer clients and how they can take advantage of this. And the biggest thing is, if you're someone who purchased a home not too long ago, so maybe anywhere from 6 months to 2 years, you may have bought a home that needs work, or you want to do work to it, and you don't have the funds necessary to do that. Now, the other common problem that happens is folks don't have enough equity in the property yet either. So the common thing you'll hear is use a cash out refinance, where you can take the equity and then you could do the renovation work to do that. The downside is, if you're someone who just bought a house not too long ago, you're not going to have a lot of equity in your property yet, so that's not always an option for new homeowners. Now, the best part, the absolutely best part about this renovation loan from a refinance standpoint is that you don't need to have that equity in your property yet. When you use a renovation loan to refinance, the lender actually uses the after repair value. So the appraiser will actually appraise your property based off the work that is going to be done by your contractor. So now, instead of having no equity or limited equity and not being able to tackle those renovations, if you use the renovation loan, you can tap into future equity, and now all of a sudden you have the equity needed to do all of these renovations and turn your home from something that needs updates to that, to that HGTV dream home. All right, guys, and with all that being said, I know this was a ton of information about renovation loans and how you can use them. I really hope that this was helpful and that you took something valuable from this. I also understand that this probably doesn't answer all of your questions, right? So if you found value in this and maybe you have questions, I'm always happy to help. Just find me on my Instagram, shoot me a DM, and I'm certainly happy to answer any questions that you have.